Hello, ladies and gentlemen. Welcome to another edition of the Business, your bi-weekly, mark my words, bi-weekly. We have changed from the daily frequency to bi-weekly. That is, we have it every Wednesday and Friday now because economic activities have started and often find it difficult to catch on a daily basis at o'clock. So that's why we block at time. So your bi-weekly event to hear that from the best of suburbs from the financial, technology, and payment industry. In our 102nd show, or second online show of the Business and Banking Dialogue, we present to you Mr. Leland Englebardt from Upshot Financial's New York. So let me give you a brief about Leland. So it will be right in front of your screen right now. So while that comes up, Leland has an extensive record of creating and implementing new strategies and innovations to rapidly grow revenue and improve delivery of payment network products and services. Leland has led business units that collectively delivered over 1.5 billion annual revenue, including almost 0.9 billion revenue growth under his own very leadership. That's tremendous. Leland led the MasterCard Network Partnership Program to accelerate US ATM adoption of EMV chip technology, creating a leadership position that continues even to this day. You know, all about the EMV cards, chip cards, which is now mandated even in India. There are no more, you can't use any more of the cards anymore. And so, you know, he has been instrumental in bringing that technology into the MasterCard network. He also created and led a team that made MasterCard the most accepted card in Brazil, the #1 Latin market. Leland has a long-term global experience working with MasterCard teams and customers in Europe, Latin America, Pacific Asia, and the Middle East Africa region. Leland has a BA degree from Dartmouth College, a MBA degree from the NYU Stern School, a JD degree from Boston College Law School, and a certificate in executive management from the Darden Graduate School of Business. So, ladies and gentlemen, please join me in welcoming Leland. Good morning, Mr. Leland. How are you?
I'm very well, thank you, and thank you for that generous introduction.
Thank you so much. So, ladies and gentlemen, whether measured by value or volume, the global payments business is vast and will continue to expand between now and for many years to come. You know, we have known about payment industry and it continues to flourish, it continues to change as days go by. However, a number of factors and trends, some already having an impact and during this COVID era, will play a critical role in reshaping the nature of this expansion. Geopolitically, the world is becoming increasingly multipolar, and as economic power shifts, so too does the respective importance of certain currencies. Currency markets have also been reshaped by the adoption of euro. Cryptocurrency is threatening to change the money tendering process. Advances in technology have changed the way we conduct payments and will continue to heavily influence the market. PayPal, Google Pay, UPI, and many e-wallets are changing the payment landscape significantly. We are all used to, payment of various kinds. We do that almost on a day-to-day basis. Each one of us does the payments significantly across using various technologies. So, once again, please join me in welcoming Leland and understand from him how the payment landscape is shaping across the globe. Leland is from New York, so that's all. Wish him good morning and welcome to the show, Leland. Once again, Leland, how is it going in New York? How has the economic activities picked up after the COVID, or COVID is still going on? But do you see an improvement?
Well, yes to both. COVID is still going on. COVID has had a devastating effect on New York City and on most major cities in the United States, as well as around the world. I can't walk down a block without seeing one after another stores that are shut down, empty storefronts. It's been devastating, especially for small business. And I'm talking about restaurants, I'm talking about clothing stores, the nail salons, the newsstands, the list goes on and on. A lot of those businesses are not coming back. That said, we are seeing a very strong resurgence of activity here in the city. It's fall here, and the children are starting to go back to school. Of course, they're not going back in the usual way, but they do have to come back into the city and be physically in the school part of the time. So you see a lot of people who have been absent for the past 6 months, who left the city out of concern, have to come back. And you also see a lot of construction activity, necessary maintenance and repairs that was deferred for the last 6 months, suddenly starting to come back. And it's double the usual rate because people have to catch up and they also have to do what's required of them. The building in which I live is a good example of that. In New York City, we have a law that says at least once every 5 years, you have to examine the entire surface of the building to make sure there are no loose bricks or anything else that could fall off and hurt somebody. And you're required to put up a scaffolding around the entire building and examine it very closely and fix everything that needs fixing. And we were required to do that. We are required to do that this year. Now we only have basically 3 months left of this year to get it done. Yeah. And a lot of other buildings are in the same situation. So it's very busy, but people are still all wearing masks. A lot of them are wearing gloves and people are taking precautions.
Okay, good to know that. So in the near future, will payments be understood to be much more than just the settlement of transaction, or the mere movement of funds, or is there mere movement of funds, or is there something bigger that you see that's going to come in the days to come?
Well, I would really say that that's not something that's going to happen in the near future. That's already happened. Payments are indeed much more than authorization, clearing, and settlement for an electronic payment. And when I was with MasterCard for 20 years, we recognized that a long time ago. The actual switching of a transaction is now table stakes. It's a commodity. What is the essence of value in a transaction today is all of the information that comes with it and the circumstances and the speed with which you can conduct that authorization, clearing, and settlement. If you back way up from payments, management of payments is really management of life. You can draw a very accurate portrait of a consumer or a business by putting together each one of their payments in the same way you would put together pieces of a jigsaw puzzle. And they all fit together somehow for an individual and for a business. And the essence of success in the payments business, as in all other businesses, is to understand your customer at the most detailed possible level so that you can anticipate their needs and desires. And payments, more than anything else in life, I believe, is the coin that will give you entry into that world of data, that world of insight, that world of understanding. So I believe more and more banks and more other payments related companies are recognizing that if you can cast your arms effectively around all of the ways people transact and all of the ways money moves in order to support their life, because everything you do in life begins and ends with a payment, then you can know as much as is possible to know, and you can use that to advance your business and to improve the life of your customer.
Oh, lovely. That's right. So I like the way you put it, that management of life, yeah, like apps with a lot of payments and with a lot of payments. And so that's the kind of lines defines us. And so which entity is able to take care of our payments does circle us, have a lot of business from us. Very well said, sir. Leland. So what are the expectations of the retail and consumer and commercial corporate end clients with regard to payments of the future?
Well, again, let me back up from the question a little bit and set the stage. And in my opinion, payments from a retailer standpoint and a consumer standpoint, as well as a corporate and commercial standpoint, payments should be boring. Now, those of us who are in the payment business don't regard it as boring. We regard it as very exciting and very interesting. But from a customer standpoint, they want, above all else, for payments to be simple and dull, just like cash. It works all the time, it works everywhere, and you don't have to worry about it. Now, having said that, of course, there's a tremendous infrastructure that has to be managed and maintained and improved in order to make it as dull and simple as possible for the customer. But that's the job of the payments industry. From a customer standpoint, if you're a retailer or you're a consumer, you want basically two things from your payments. You want them to be completely reliable, just like cash. Cash works everywhere. And you want them to be ubiquitous. You don't ever want to be prevented from doing anything you need to do or want to do because the payment didn't work. From a corporate standpoint and a commercial standpoint, once again, the core of it is reliability, because efficiency is a very, very high value for corporate customers. They need to scale their operations. They need to bring down the cost per transaction continuously. And that means it needs to be reliable. It needs to hum along like a Swiss watch and not need anything more than the minimal amount of maintenance. And in addition to the reliability and the efficiency, they want security. And security has been and continues to be one of the top challenges to the payments industry. We can talk about that a little bit more down the line. But again, it is my belief that there is no length too great and there is no investment too serious to ensure adequate security of the payments system. As we move ever more away from physical instruments and toward digital instruments, the opportunities for criminals to hack the system and to cause disruptions, and most importantly, the opportunities for criminals to undermine public confidence in the system, which is critical to any payment system. That has to be first and foremost the focus of a dedicated group of people, both within the payments company and within the customer, to get all the information you can, to monitor it continuously, and to really respond swiftly whenever anything looks out of order. So backing up from it once again, in order to create simplicity, we need, in the payments business, to be prepared to develop a relatively complex but effective set of tools and systems and an infrastructure that the world can rely on, that all of our customers have complete confidence in. That is the glue that holds the banking relationship together with its customer.
Absolutely, well said. And I think what you said about the low cost and specifically when the economic activities start, the low cost efficiency tested, I think, time and again to ensure that the enterprises survive. You also talked about banks, and I think banks play an important role in payments. Do they need to change or transform to meet the new challenges of payments of the future? And if it is yes, in what way should they change?
That goes back to my experience at MasterCard. One of the major industries that we sought to convert from paper forms of payment to electronic forms of payment was the insurance industry. And the insurance industry for many, many years was highly resistant to electronic payments. We would try to persuade them that they were more efficient and that they could reduce costs and make costs easier to manage on the long-term basis. And they continuously resisted that argument. What we discovered was that they were measuring efficiency in the wrong way. And when I say wrong, I mean it was wrong from a payments evolution perspective. The insurance companies were measuring efficiency by the cost per check because paper checks was the way they conducted business for decades and decades and decades.
Yes.
Well, if you measure efficiency in that way, you will never adopt electronic payments because, of course, as electronic payments take share from paper checks, your cost per check goes up. So we had to re-educate the industry and provide them not only with a payment solution, but with an alternative way of measuring their cost effectiveness in order to start being successful to convert that business. So that goes not only to the payment system level, but it goes to the individual bank level dealing with its corporate customers. You may have to dig below the surface and look at the fundamental ways that your customer is measuring success in order for your arguments about change and new tools to resonate and for you to actually be successful in converting that business. So I think it isn't just about payments. It's about the way people manage their businesses, going back to what I said about the way people manage their lives. You have to understand that on a relatively layered and detailed level in order to make the impact and move that relationship forward. Now, you ask about banks playing an important role in payments and how they need to change. Well, of course, the banking industry is not known for rapid change. But the banking industry, in my view, is being dragged, kicking and screaming in some cases, into the 21st century and is having to change faster. And I think one of the fundamental ways that banks all over the world have had to change their point of view is that in many, many cases, especially with multinational banks, they have traditionally done almost everything in-house. There was a very strong not invented here mentality, and they view that as part of their proprietary competitive differentiation. And in some cases, that is true. But with respect to payments, I think the great realization in the banking industry over the past couple of decades, which is still going on very strongly, is that you cannot do it yourself. No bank is an island. That you have to, especially with respect to areas like security, you have to enlist the aid of others whose vision is higher and longer than your own. If you are doing your own security, for example, you can see as a bank what is affecting you, and you can respond to it. But increasingly, that is too late. You have to enlist the aid of payment networks that have a global perspective, of processors that have a national or multinational perspective. You have to enlist the aid of technologists who can improve your security systems by the use of machine learning and artificial intelligence. You have to go beyond your own capabilities in order to build an effective way to prevent fraud, rather than simply reacting to it when it hits you. And that one example, I think, carries across to all areas of payment technology. Banks are not necessarily in the technology business. Some of the biggest global and multinational banks certainly have highly capable technological operations, and they need to in order to maintain their systems. But even those banks, with all their resources and all their reach, cannot do it alone. They must form a coalition with their service providers. They must form strong, long-term partnerships with technologists and independent companies who can give them insight into areas that simply aren't cost effective to invent in-house. And even if they were, they wouldn't do as good a job. The other big so what for banks, I think, in the 21st century is omni-channel. And what that means is that consumers and businesses are increasingly transacting in a variety of channels. And that variety of channels keeps expanding, and the tools they use to transact keeps expanding, all the way from cash that's been with us for thousands of years up to the latest introduction of mobile payments and digital payments. And that increasingly omni-channel consumer activity demands of a bank that they look at that consumer more holistically and connect more systems and connect more data than they ever have in the past. And that should be a focus at any bank of scale, understanding the consumer's full payment lifestyle needs to bring together all these omni-channels. So you need, there again, you can do it much more efficiently and much more swiftly if you bring in partners to help you understand that life. So yes, a bank needs to change. They need to change in ways that increase their insight into their customers, which will allow them to serve those customers better in the ways that they know how to do, to anticipate their needs as well as meeting the current needs, and to create a differentiated value proposition so that they can attract new customers, both individuals and commercial customers.
Excellent. I think that thought of omni-channel is really intriguing. So who must be advising a lot of banks or financial institutions, and and if you can tell us instance of what are the transformation that you are advising banks to in the days to come, and if you can also give us a brief of what as an advisor that is Upshot Financials, you're advising many banks. So what does Upshot Financials do, and what are the kind of banks, what are the kind of changes that you see banks are adopting? If you can just tell us one or two cases, it'll be great.
Certainly. My practice at Upshot Financial is basically divided into two areas. One area is business research and writing. I do a tremendous amount of writing studies. The ATM Industry Association, of which I have been a member for decades and formerly on the board of directors, has retained me to do studies of ATM deployment so far in a half dozen countries and the continent of Africa as a whole. And that's a fascinating process. I enjoy it tremendously. Those studies are available to any member of ATMIA or any bank that wants to get a greater insight into its ATM business. The other part of my practice is working one-on-one with the senior managers at banks and credit unions to help them renegotiate their relationship with critical payment service providers, such as networks and processors. And this directly relates to the point that I was making a few minutes ago about banks not being able to do as effectively for themselves as they can get their partners to do for them. And the focus of the negotiation, of course, is always financial in large part, but the longer term areas that we focus on are enlisting the aid of the networks and the processors to improve platform management and to migrate their business to platforms that can serve them better, to analyze data in more effective ways and more targeted ways so that the bank can understand their customers better, and to look at the revenue that the bank is getting from interchange and try to optimize that, because banks deal with a multiplicity of networks, each of which has a different level of interchange, sometimes an incredibly complicated interchange regime. And it's an enormous task to analyze that and see how you can optimize your revenues from payments. And that's something, once again, that processors are very well equipped to do because they have an overview of every network that they deal with. So I help the banks define the terms of their relationship with their service providers, and I help them optimize the terms of the relationship so that they get the greatest possible information and the most active and committed level of assistance in order to increase their revenues and minimize their costs.
Thank you so much. That's wonderfully put. Ladies and gentlemen, I hope you're appreciating the depth of experience that Leland carries. And he has been a catalyst in changes that are happening across the globe, not only in the US, but also outside US. And I think we should, I'm sure there's a lot of questions that you want to ask him. Typically people from the banking and the payment industry, they would like to ask a lot of questions. So I would open up the Q&A box for you to ask the questions, and I will get across to Leland as many questions as possible. You are also allowed to ask a question directly if you wish to, that Leland would look at it and see whether he would like to answer that or not. It's a prerogative with him, but I'm sure he will be able to do justice to your questions. So while I continue my discussion with Leland, can you please put in your questions in the chat box and don't wait until the last minute to ask your questions. So we talked about collaborations, Leland, about banks as an entity cannot do that on their own, and that they need to have a collaboration with technology companies. So large technology and retail collaboration, such as the one in the USA, which is the FANG, Amazon, Google, Netflix, and Facebook, are seeking entry into the payments market, or they have already started in some way or other. At the same time, new electronic currencies such as Bitcoin offer payment options independent of government control. Could you please explain those changes that are happening in the fintech, the retail, and the Bitcoin collaboration, and how will it change the payment landscape?
Well, that's a pretty big question.
Yes.
You're talking about the world's most highly capitalized companies who are unbelievably good at what they do and who have long since recognized that payments are intrinsic to their business, and the more seamless and invisible they can make payments, the more it will contribute to their success. You talk about over the past number of years, and they were really launched by the distributed ledger technology, the blockchain technology. Although that's not exclusively the way you support a digital currency, you can use other technologies as well, but blockchain has been the most talked about. I see that space as a spectrum. On one end, you have Bitcoin, which is completely independent from any other currency, which has its own system of value. And of course, it's very early days for digital currencies, even though to those of us in payments, it seems like they've been around a long time, but a long time is less than a decade. They're still incredibly volatile. They're still incredibly immature, these coins. And as long as that is the case, as long as that volatility is present, they will achieve some limited acceptance and some limited currency, but more as a speculative investment, in my view, not as a means of transacting. Because as we see in countries that have hyperinflation, you can't meaningfully transact in a currency whose value is unknown from day to day. So you take a big risk, And if you do transact in that currency, there's a lot of friction. So any retailer that wants to accept an alternative currency is going to hedge themselves against fluctuations of value, and that's going to result in a lot of inefficiency. That's one end of the spectrum. The other end of the spectrum, of course, is the currency, the fiat currency that's issued by governments. And that's the opposite of Bitcoin and other coins in any number of ways, especially in terms of its stability if the nation has a stable financial system. In the middle, conceptually, sits something like what Facebook tried to do with Libra. Now, the Facebook Libra experiment will probably go down in history as a big early failure. But in my view, that's not because the concept was flawed. I think the concept is brilliant. I think the concept of Libra is logical, and I think the concept will ultimately work. What I mean by that is that Libra was a coin whose value was pegged to a market basket of fiat currencies, the dollar, the euro, major currencies in Asia, and therefore it had a level of stability and predictability that would actually make it useful as a means of transacting. Here's the rub. All of these alternatives to government currency are viewed by the government as competition. If a government doesn't control the money, they control nothing. Governments are very, very well aware of that. And they have tolerated, I would say, the coins like Bitcoin because they haven't come into broad use as a means of transacting. There are lots of speculative investments out there, whether it's coins or whether it's options or whether it's exotic financial products, and the government is willing, with a minimal amount of regulation and oversight, to let those things exist. But Libra posed a real challenge, and the government's response was to kill it, at least temporarily. So I think the fintech, retail, Bitcoin, or general coin collaboration is going to continue, and eventually they're going to get it right. They're going to come up with a coin that is stable or relatively stable, and that is ubiquitously accepted, and they're going to get regulatory permission to use it with, I would say, the proper and comprehensive level of oversight that the government will feel it needs to provide. At the same time, I think at the government end of the spectrum, you're going to see digital fiat currencies. And that, in my view, is one of the most important developments, and it's not long in coming. A lot of major governments are looking at this. The collaboration with the fintechs will move to a more structured, regulated, digital fiat currency level. And that will create an environment where government gets more comfortable with digital and gradually accepts the notion of alternative currencies that are pegged to fiat currencies and therefore give a measure of control. So I'll stop there for the moment.
Yeah. So do you see such an initiative that have like actually moved ahead? Because we hear a lot of initiatives happening in the digital currency or in the Bitcoin, but like you said about Libra, they somehow soon die down. So do you see that where a currency is brought in, where there is a control by the government, control by the monetary authorities, brought in by the fintech? Do you see do you foresee any such products in the near future?
Well, near future, if by that you mean, say, the next 10 years, then yes. Not in the next year or two or three, because there's going to be a lot of thought and a lot of engineering that goes into this. But in my view, the growth of digital commerce, especially in Asia Pacific, that there is more digital commerce in India and China and the other, that region of the world. I think it accounts for almost 50% of the global digital commerce just by itself. And there are lots of good reasons for that. And I think that development in your own country and in your own region is going to lead the world in this direction. And pretty soon, in fact, already, I think, in some governments, and pretty soon in most governments, they're going to recognize that they need to have a formal digital currency approach that brings this market into the mainstream. It's already mainstream in terms of consumer adoption, but the government is going to want to be a direct participant in this, and the government will realize the same thing that I think banks have realized and fintechs have realized, which is that in order to understand their people, they need to understand their people's payments. And a digital fiat currency is going to be a major step toward the government having more insight into our daily lives. Now, some people may think that's a terrible thing, that the government sees more of what you do, and other people may think it's a terrific thing. I'm willing to listen to both sides of the argument, but I believe it's inevitable. And that doesn't necessarily mean that cash is going to go away. In my personal view, cash is never going to go away. It doesn't mean that any other form of payment is going to become obsolete. It's part of this long-term and accelerating trend toward more channels, more forms of payment, more ubiquity of payments themselves, more seamlessness. And all of that is going to generate vast quantities of information that the industry is already gearing up to handle and process and turn into useful guidance for how to improve people's lives.
Excellent. Very interesting, Leland. Excellent. I mean, it's exciting times, I think, ladies and gentlemen, coming ahead of us. And I think one of the factors that is perhaps accelerating the new way of the transformation in payment, be it the digital currency or be it anything else, is the pandemic. So, no session is complete without asking our guest, what's the effect of the pandemic? So, Leland, the impact of pandemic is going to be long-standing, and we cannot rule out government across the globe extending frequent social assistance, to the people, to the poor. What could be probable options in the payments from the government to the public, which today constitutes a vast amount of payment transaction that's happening? So countries like India and many other countries where there are lots of population who are left with no jobs or in the remote area, this is a massive amount of payments happening from the government to the people, especially in the rural and in the remote areas. So my question to you is, what kind of payment infrastructure should the future look like typically for the government to people's payment?
Question. The pandemic has certainly, as has widely been reported, has certainly accelerated the adoption of digital modes of payment. What was forecast to happen over 5 to 10 years has substantially happened in less than a year. And I think in a great many cases, that shift will be permanent or long-term. And so the government's going to adopt to that. I also think that this has focused government attention and private attention on infrastructure investment, payments infrastructure investment. Payments need a supply chain just like every other product needs a supply chain, whether you're talking about transporting physical cash or supporting digital transactions. And it's been realized that the traditional upon physical proximity that the pandemic has prevented. So increasingly, I think, governments will be distributing benefits digitally, and they will be investing in faster payment infrastructures and using faster payment infrastructures to deliver those benefits in a more real-time way. That is going to, I think, revolutionize the consumer experience of receiving benefits, because it places a high, the less frequently benefits are delivered, the more burden it places on the individual to manage those payments for themselves. And a great many of the people receiving benefits are not sufficiently experienced in managing assets because they've never had assets, and they don't do it in an effective way, in a way that would best serve their interests. And to the extent that the government can deliver those benefits faster and in what you might call more bite-sized pieces, in a continuous way rather than an episodic way, that's going to work very much to the benefit of consumers whose focus on utilizing payments is much more short-term than somebody with many more resources. And I think the government does its citizens a tremendous service by rebuilding and evolving its infrastructure and its supply chain toward faster, sort of just-in-time delivery of benefits in a more continuous way. The other thing is, of course, you must be digital. Whether you're a government or a private business, it has become increasingly apparent that face-to-face retail is not enough. You must have a digital channel, and optimally, you must be able to accept payments through a digital channel. At the very least, you must be able to sell through a digital channel and have arrangements to accept payments physically in a way that's convenient for the consumer. Now, some things that can be sold digitally must be delivered physically. And there are ways to cross over channels so that people could even pay for cash for things that they purchase in a digital fashion. But increasingly, once again, the payments are going to be part of the digital world. They're going to be seamless. And it's now recognized that the volatility of physical payments is going to be much greater and more detrimental to commercial interests than digital. So this is a fundamental shift, because the traditional argument for cash is, well, it works all the time. Even in the midst of a monsoon or a hurricane, and you're up to your neck in water, you can still reach out and pay somebody in cash where your phone doesn't work and the electronic infrastructure doesn't work. Well, yeah, theoretically that's true, but the kinds of crises and challenges that we have confronted in this pandemic have given us a different perspective on that. Indeed, it's the technology that continues working where the human interaction breaks down. So I think digital has become mandatory rather than nice to have.
Yes, absolutely. So let's look at some of the questions that are coming in. I've got two questions and they look more or less similar. So I will bring I'll tell you both the questions from two of our participants. One is saying payments are becoming instant. Also, payments are becoming invisible. Does that spell death of payment cards? That's one question, and I think it's a similar question, so I'm putting it across to you. Some trend watchers say physical cards will continue to the digital age. Can you substantiate?
Well, look, paper cash has remained relevant in the digital age. We still have in the upper 70% range of all the world's transactions conducted with paper cash. So I think it's short-sighted to have the view that a new form of payment is going to replace an existing form of payment within the near term. Backwards compatibility has always been crucial to our industry and will continue to be. Also, notwithstanding the fact that payments can be seamless, payments can be invisible, And some people will be very comfortable with that. I believe that human nature drives people to seek a measure of control, especially when it comes to their money. And that control may not be as efficient in objective terms as a seamless instant payment, but it's essential to the consumer's peace of mind, and indeed to a business's peace of mind. They have to feel as though they have voluntary control over any consequential material transaction. And the physical act of taking a payment card out of your pocket or out of your wallet and presenting it and being able to feel like this transaction can't take place until I let it take place is important to a lot of people, and it will continue to be important to a lot of people. I feel very differently about getting onto the subway, for example, where I'm comfortable walking through the turnstile without ever taking a payment instrument out of my hand and having it electronically collected. Every time I drive over a bridge in the New York City area, my tolls are electronically collected. I'm perfectly comfortable with that because it's like $5 or $8. But if I'm going to pay for a nice meal for 2 or 3 or 4 people, I don't want that seamlessly and visibly collected. I want to look at the bill and make sure it's right, and I want to conduct that transaction because it's material to me. And I think we have to be continually mindful that the payments world is a balance between technology and human nature. And therefore, changes come slowly, perhaps more slowly than they should in principle. But you evolve with your customer. It's just like the example I gave at the outset of our conversation, where the insurance companies had an embedded, dedicated way of measuring their efficiency, and it took a long time to re-educate them so that they looked at it in a fresh way. It's human nature. I think people take a while to evolve. Some people are early adopters, other people will never, ever adopt. I can tell you, my mother is 95 years old. She has never used an ATM. She doesn't want to get her money from a machine. She wants a social interaction when she gets her money. It takes generations for these things to evolve. So are payment cards going away? Not in our lifetime, probably not in our children's lifetimes.
Okay. So the payment cards is threatened with virtual card or virtual accounts. Do you have any thoughts on that? Is that something that's coming up big time?
Yes, I think already in the commercial sphere, you see large accounts, virtual accounts accompanying physical payment cards. And I want to emphasize, by the way, that commercial, business to consumer and business to business payments are perhaps the most fertile field for payments growth in the world, from the standpoint of payment networks and from the standpoint of banks. There is still a heavy reliance on paper forms of payment in that sphere. And I think business after business that has shifted from paper to electronic payments and to virtual accounts has seen enormous benefits from that. Benefits not only in terms of the payment itself, but in the data that they get from the payment, and that they can feed that back into their intelligence about their business. So on the business side, on the corporate side, the virtual account is absolutely already a strong phenomenon, but its penetration in the market is still relatively small. I think that's a huge field of commercial growth in the very near future.
Okay. So one way of, there have been transformations in the way people pay. It was earlier with cash, then the cards came in, then the cards became a touch and go, then it became a contactless payment. Do you see emergence of wearables as another way of doing payments? And if so, could you give us some instance?
Well, wearables are another way of doing payments, but I think they have their limitations. I have an Apple Watch. I've paid with my Apple Watch. From my personal perspective, it is not yet as satisfactory an experience as paying with my phone. So I think wearables are a cool idea, and they have their uses. But I think, once again, back to the fundamentals of human beings, a wearable has to be pretty small, and our ability to interact with it is limited for that reason. We don't have little pointy fingers. We have relatively large fingers relative to the watch we're wearing or the wristband we're wearing. So I think for some basic reasons, wearables have their uses. But once again, let's back up and look at the overall secular trend here. We have lived through and are continuing to live through what I view as the death of the single function device. I think we can all remember when we had a calculator. Nobody has a calculator anymore. We remember when a phone was for phone calls. That phone calls aren't even in the top 10 list of things that people do with their phones now. So every device that is going to be viable going forward is going to be a multi-function device. Wearables are physically limited in that way. Can they technically support it? Sure. But how much stuff can you really do on a 1 inch by 1 inch surface? You're going to need something bigger. So I realize there's a level of enthusiasm about wearables, and there's a lot of hype about it in the press. But once again, my personal view is that we will continue for the foreseeable future to have mobile devices that we carry with us that are capable of doing vastly more in a much more user-friendly way than a wearable device. That said, yes, wearables will be used for payments, and that's good.
Okay. So let's take a question directly from one of the audience. Tyag from Chennai, south of India, would like to ask a question to you. Tyag, can you unmute and ask the question?
Yeah. Hi, Leland.
Hi, how are you?
Yeah, good. Thank you. Yeah, good. Thank you. It's quite a very interesting topic on coming from the MasterCard subject matter expert. I've been glued to the screen, so such a vast knowledge and kind of experience. So having said, my question is, what is the future payment technology that you would bet on? For example, I keep hearing payments through voice enabled, payments through gestures, payments through a blink of an eye. Is it something like a soliloquy or a kind of story, or is it going to be a reality in future? And what are the future payments technology you would bet on?
Yeah, it's a great question because there's a lot of excitement and a lot of hype around new payments technologies among several of the ones that you mentioned. For me, again, coming from a global network background, 3 of the most scary words in any language are new payments technology. And they're scary because, going back to what I said at the outset, the prime requisite for any payments technology is that it be reliable, that it be ubiquitous, and that it be secure. And new payments technology, almost by definition, isn't as reliable quite yet as it should be. Its security is unproven, and it certainly isn't ubiquitous. So I believe that the best new technology, the word new in quotes, is the technology that's been proven, the technology that's been piloted and tried, and the technology that really works. And so my choices in that area right now are faster payments. Now, faster payments isn't new technology in the sense that it was invented yesterday or the day before, but faster payments is just picking up traction. And I think it's going to revolutionize the bank's ability to serve its customer and government's ability to serve benefit recipients. And it is, because it's bank to bank, it is a technology that can be protected because its endpoints are already well protected, and can be ubiquitous because it is, in many cases, sponsored by organizations that already have ubiquitous connections. So I think faster payments is something that the payments industry, if you're not looking at it already, you're behind the curve. You really ought to look at it. The other area that I would nominate for attention is the security area and the use of artificial intelligence and machine learning for security. Criminals are better resourced than they've ever been. They're smarter than they've ever been. They move faster than they ever have in the past. A criminal sitting in New York City could be hacking a bank in Mumbai even as we speak. There's no geographic limitation on that. And I think you need to be ahead of it. And the only way, the best way to be ahead of it, the way that has been developed to a point where it's actually starting to yield good results, is artificial intelligence that uses predictive modeling and extrapolation in order to prevent fraud before it happens and recognize an attack before it becomes widespread and effective. So if I was going to invest in two things, I would invest in that. And if I was going to keep my radar tuned to one other thing, it would be what I mentioned a few minutes ago, which is digital fiat currency issued by countries. I think that's an enormous opportunity for financial institutions and an enormous opportunity for payment facilitators worldwide, and especially in Asia Pacific, where you're so far ahead of the curve already in terms of mobile commerce and digital commerce.
Thanks, Leland. Thank you so much. Thanks a lot.
Thanks, Tyag. That is an excellent question. I have one more question that let's take it up, Leland, before we wind almost the hour. It says, will we see progress on developing stronger standards for assessing transaction riskiness, demonstrate traceability in a cross-border payment, and facilitating authentication across the transaction? Is that, do you see progress or maturity in?
Well, I'm not sure what context is meant by the word standards in that case, but if it's what I think it is, I agree. As a matter of fact, I worked with the Federal Reserve Bank of the United States on a project just last year to develop a new taxonomy for classification of fraud. And we made every effort to make it simple and to cross potentially all forms of payment. One of the keys to preventing criminal activity is to recognize trends in an omni-channel world that cross forms of payment and common elements and pattern recognition. And what we constructed and what the Federal Reserve in the United States has published is a very simple, straightforward, but comprehensive taxonomy for classification of fraudulent activities. And that will, I think, to the extent it's adopted, help people understand that and make progress toward preventing fraud across their organizations a lot faster. So yes, I think these kinds of standards that allow us to correlate activity in all parts of the consumer and business payments life cycle, that is going to be of enormous importance going forward, and the progress has already started.
Excellent. Thank you, Leland. I think I know it's 1 hour since we started our discussion. Thank you so much. I think it's been a great insight into what's the new payment that's coming, and it's coming from you. You be the in the transfer of payments. So hear from you, Leland. And so, yeah, ladies and gentlemen, a couple of things that Leland did talk about. There is opportunity for the fintech in the digital fiat currency, especially in our side of the world. Security is a big thing. Cyber security, according to Leland, is something that we need to have. We need to strengthen. We need to focus, because giving confidence to customers in their payment is very, very vital, and that's important. GTP, government to people transfers will happen. We'll get more focus, especially because of the pandemic and the need for the governments to support. So we will need better infrastructure. And I think he summed it up very well in the beginning itself. Management of payment is management of life, basically, and that puts it all. It's the entire payment cycle management is extremely important for the way the things are managed in our lifestyle. With these words, I would request you, all of you, to join me in thanking Leland. It's early morning for him, 8:30 Eastern time, and he has spent with us 1 hour. So Leland, thank you so much for coming over, talking to our audience, telling them about what's coming up in the landscape of payment. Thank you very much. And
thank you.
You have a day ahead of you. Thank you so much.
Taj, should thank you, because it's an honor and a pleasure to speak with you and to speak to a community of people that I don't get to interact with frequently enough.
Thank you so much. So, ladies and gentlemen, we wind up the session. Tomorrow we have a Heart Talk, which is a lighter online show where we get music, acting, etc. So we'll catch you tomorrow at Saturday. It's at 3 o'clock, not at 6 o'clock. We don't want to spoil your Saturday evenings. So it's at 3 o'clock. So hope to see many of you in the lighter show called Heart Talk. Goodbye and have a nice day.